Orton is Chief Market Strategist at Raymond James Investment. He's joining us now. Matt, great to have you with us here on the program as always. Thank you very much for your time. Will we get a pause in September? Many are saying that maybe the Fed is done now because there is cooling which is showing through. All the numbers were in line. There was no large, how should I say, beat or miss, depending on how you want to look at the US CPI number. What's your sense and what does it mean for markets?
Hey, good morning, Prashant. And I think the CPI data was definitely encouraging. And I think the data last month, this month, it really gives the Fed the room to pause. But I think it's too early for anyone to be saying and declaring that mission has been accomplished because, as you noted earlier in the program, the base effects are going away and there's still some sticky components to inflation that's related to wages, that's related to housing. And that's something that the Fed is going to have to watch. And the consumer in the US has been incredibly resilient, and people are even starting to buy more stuff again when you break down retail sales. So the Fed's going to have to balance all of this. So I think we get a pause in September. Whether or not we can say we're officially done, I'm not so sure yet. But the one conclusion is that rates are going to remain higher. And, I've been traveling the past month talking to clients all around the country. And one of the most common questions that they ask me is related to this is, are we done with inflation? Are we done with this overhang to the overall market? And the answer is just, I'm not sure yet. And so how that influences where you look for investments, it's playing this broadening of the market that we've talked about before. It's encouraging to see over the past 2 months, the more cyclical parts of the market starting to work, not just in the US, but globally. We're moving away from just the mega cap technology names. And even over the past month, you're seeing strength in energy. You're seeing strength in industrials and consumer staples, healthcare, places where earnings are actually encouraging. So there's still a lot of opportunities in the markets for clients to move into that and maybe take some profits on their biggest winners this year. And then also look to diversify overseas because emerging markets, especially EM ex China, I think still continue to look very, very compelling.
Okay, that's the cue that we're going to take, right? Emerging markets ex of China still look compelling. I mean, we've seen almost $16 billion get pumped into the Indian market so far this year, the best that we've seen in a long time. So how are you feeling about that, Matt? Do you think India is still the preferred pick amongst emerging markets ex of China? And is there more to go on the upside?
Yeah, hi, Sonia. And I think it's encouraging to see interest in India. And it's funny, for the first time, I think, in a very, very long time, talking to clients about India, they're receptive to the overall conversation. So I think when we look at the possible investment perspective going forward, the correction that we've had so far in India, if you can even call it a correction, is healthy. Seeing some sort of orderly consolidation is what we need coming off of all-time highs. And so when I look at the Indian market, it's encouraging to see foreign money coming in. I think that's going to continue, especially based on the conversations I've had with institutions, retail clients here in the US. People are catching on to the long-term value that's in India. And so I think banks, even though there's been a little bit of recent weakness, I think still continue to look attractive. Industrials, particularly aerospace and defense, anything related to infrastructure spending, especially ports, which are going to become more and more important to supply chains reshore and move over to India. All of those are great long-term investment opportunities. And valuation overall still fairly attractive, given, I think, the earnings momentum that we're seeing. I mean, earnings season's been pretty strong in India. So I think there's still a lot of opportunities, and I would use downside opportunistically.
All right. Hi, Matt. Good morning. Matt, from an India perspective, we don't want to see crude oil prices spike up. Now, Chinese demand hasn't really come back, but you're having supply cuts, and that's what's pushing up crude oil prices. So as a house, I want to know, what's your view out there? Do you believe that it's now at the upper end? Or from an India perspective, which we'll not like it at all, do you see it even trend higher from here?
Hey, Nigel, I think the crude oil prices can continue to drift a little bit higher. I was actually surprised by how low they went earlier this year, given the fact there have been persistent supply constraints. We have the ongoing war between Russia and Ukraine. You've had a drawdown of the strategic petroleum reserve here in the US. And people around the world, even in China, people are traveling more. So the demand part of the equation hasn't receded either. So especially as you see more
Hey, there's a bit of an issue with that video. So, Matt, we're going to have to let it go on that note.